and gentlemen, thank you very much for joining us. One could say there are similarities between ESG and Islamic finance. Both aim to promote societal benefits and eradicate harm. ESG assets is close to US dollars 20 trillion. However, Islamic finance in comparison is hovering just close to $3 trillion. Our focus today over the next 30 minutes is to discuss the topic of Islamic sustainable finance. We look at where the market currently stands, what is its potential, and within the broader ESG market, what challenges we need to overcome. We're pleased to have three very distinguished industry leaders, Raja Amir, Shah, Angelia Chin, and Ella Kara on our panel today. Raja Amir is the CEO of HSBC Amanah. He spearheads the sustainable leadership and value-based intermediation efforts for the HSBC Group and in Malaysia. He has played a very important role in the Sukuk market, having originated and structured a number of first-to-market landmark Sukuk transactions. Angelia is CEO and head of Southeast Asia and Hong Kong distribution at BNP Paribas Asset Management Singapore. In addition to overseeing the firm's Southeast Asia business interests, she is in charge of driving sustainable solutions across the market's client groups. And last but not least, Ella Kara is an investment director at the global equity team at abrdn, where she leads the Islamic strategies and sustainable equity products. Welcome to the panel, Raja Amir, Angelia, and Ella Kara. It's nice to have you here. Let me start by asking the first question to Raja Amir. Usually it's ladies first, but I think we have you as the only odd one out here, so we will give you a lot of preference today. And so, Raja Amir, could you walk us through some examples of sustainable Islamic banking products in the market right now, and share with us as well how have you seen this change over the recent years?
Sure, thanks, Lisa. Pleasure to be on the line today with you and to share some of the insights regarding the development of the products, specifically ESG social products within the Islamic space. So, I mean, just to answer your second question first, in terms of the development within this space over the last few years, definitely we have seen, a huge growth within the type of products which are available in the banking space as well as the capital market space. And specifically regarding the way they are structured, as well as the kind of disclosures that investors expect, has been on a upward trajectory over the past few years. So if I could just very quickly sort of just break it down in terms of the kind of banking, Islamic banking products that we see which do comply with ESG, starting first with what we see on the retail side of things. So we must always remember that banking is not only wholesale, it's obviously retail as well. So the kind of retail products which we have seen in the market proliferate over the past few years are the types of green mortgages. So green mortgages would be products which are lending products which are attached to a loan which is being provided to a client who is looking to buy a property which has been certified as green. Now the certification takes different sort of forms. It can be LEED, it can be GBI, depending on the jurisdiction of the financing. Secondly, we have credit cards with charity features. So these credit cards, when I say with charity features, means number one, the credit card is made of 100% recyclable plastic. And also there is a charitable feature within that credit card, which allows you to make a donation to one of pre-selected recipients. And if you do make that option to donate, the bank will typically match fund up to a certain percentage. In the case of HSBC Amanah, we match fund 1% of any donation made on our credit card. And then there's obviously the solar financing, which is financing which is provided to clients who want to upgrade their houses, to provide to put solar panels in their houses. And there's also on the car side of things, the vehicle financing, there are special financing products for EV financing, as well as to set up EV charging bases in your own home. So we move on to sort of the financing asset side of things, which is in the wholesale segment. So within the wholesale segment, you have obviously your green, social, as well as sustainable financing. So these are very much products which provide financing, which align with one of the principles in the market. They can be the Loan Markets Association group green loan principles. They can be the loan markets social loan principles. And as of late, we've seen a development within the sustainability linked financing space, which is obviously, as it means, use of proceeds are pretty much open. You can use the facility for something which is not as prescriptive as a green social or a social loan. However, the financing is tied to a specific rate. If you achieve that KPI, or if you don't achieve the KPI, you pay a step-up rate, or an equivalent amount of penalty is used as a charitable donation. Now, on the trade and supply chain side, also, we've seen development of sustainable supply chain financing, as well as green trade financing, whereby it's essentially to help customers greenify their supply chain. So if they're able to source products from a certified provider of a resource or a component within the supply chain which is green, there are solutions which would incentivize the borrower to take that facility. Also, there's also certain supply chain financings which take advantage of sort of people within the supply chain who do not have a good credit standing, but that facility allows them to lean on the credit ability of the ultimate buyer of that facility. So we've seen quite a number of that. And then just on the liability side, in the liability side of things, we've seen a growth in sustainability linked accounts as well as green deposits. So what this means is that investors are putting their deposits with an institution, which is ultimately tying that deposit to a specific green financing. Or in the case of a KPI linked deposit, the rates, as we mentioned before, is paid out if the institution is able to demonstrate that they have actively achieved that particular KPI. And then just to close off, obviously the capital market space, which we will speak about soon, similar as well, you have your green, social, as well as sustainability sukuks. And then the latest sort of permutation to this is the sustainability linked. Again, very easy. It's green, social, and sustainability is for specific use, whereas sustainability linked is an open-ended financing where you either pay a top-up rate if you don't meet the KPI, or if you don't meet the KPI, alternatively, you can make a charitable donation. And then just on the last one, which is the treasury and hedging solutions. Now, this is one of the latest sort of products in the market. Again, there's a growth in sustainability linked derivatives, which is not essentially tied to a loan. So the loan can be a plain vanilla loan, but the end derivative, which is a profit rate swap or a cross-currency swap I, will be tied to a specific KPI of the client. And again, if they achieve it, they get a specific rate. If they don't achieve it, there is a penalty. So these are just some of the products in the market which have proliferated over the years. And we've seen a strong uptick in demand from clients, because they obviously want to to sort of make these commitments within their own businesses as well.
Thank you so much. That's very comprehensive. I think that's really very much the entire landscape. If I can just have a follow-up question from what you explained. In making this maybe just a little bit of differentiation from what's out there in the market, from what you just said to what Islamic finance offerings is, could I say that, with the linking of credit card to charity, is that Islamic finance tend to also couple the considerations of environment very much at the same time with social impact as well? Are you saying that as a trend and as a feature for Islamic finance or Islamic sustainable finance products?
Yeah, that's a very interesting question, Lisa. I think when the market started, it was very much use of proceeds based. So you would raise the financing, you would deploy it towards a certain predetermined use of proceeds. But now we're seeing a bit more development in terms of impact based. So, people want to see essentially not just, an allocation to a certain project. For example, they want to see what was the benefits derived from that project. How many people did you bring out of poverty from providing that type of financing? What community benefited in terms of that specific financing? So we're seeing a bit more impact based. And specifically within the capital markets, we've seen impact-based sukuks, where the use of proceeds is for something which is not really, it's tied to a certain outcome. For example, indigenous population upskilling. For example, we've seen a sukuk which was raised for immunization of polio vaccination within some of the poorest countries within the Islamic Development Bank network. And this is the kind of, the reporting which is expected from investors as well. And of course, within the charitable contribution space, there is a product which is pushed by Islamic banks in Malaysia called iTekad. So iTekad is essentially, it's not a product which aims to, it's not a financing product. It's basically a product which the institutions, they contribute via their zakat contributions towards a beneficiary who is, an entrepreneur, for example. So they give them a grant, for example, to purchase machinery or to do something to that effect. And it's given in the form of a grant. It's, you don't expect to make a return from that. And they're using their zakat funds specifically for it. So definitely we're seeing a bit more development within that space.
Thank you, Raja. Amir, I'll just quickly move on to Angelia. What are you seeing in the capital market and how has that changed? So the same question, but from capital market lens.
Yeah, thank you, Liz, and then thank you for having me at this conference. I think what Raja Amir has basically shared is some of the facilities has been offered from the bank side in terms of supporting capital flows into some of the sectors of economies in terms of moving to meet our net zero commitment, plus also the social impact part in terms of some of the consumer products that HSBC have offered. I think in the case of the capital market and especially on asset management, given that I'm with BNP Paribas Asset Management and we are actually managing monies for our investors, I think first and foremost, we need to recognize there has been regulation in place. And given we are an European-based asset management company, we're very much aligned to EU commitment in terms of net zero. And you are also aware there's already a lot of regulations coming out of EU in terms of how products are to be structured. And you're also aware that, today products have classifications such as SFDR 8, SFDR 9, SFDR 6. So those are very important evolution where it's quite important what that means in terms of impact to the capital market, because if you have a product which is SFDR 8, which means that ESG integrated, meaning that wherever we invest, whether be it developing economies or developed markets or developing markets, we need to make sure we comply to those regulations to ensure that our product meets the classifications for the fund. So if you look at those evolution, therefore it's quite important in the capital market that we need to push towards making sure the universe of the capital market will be able to meet our requirements in terms of being included into the portfolio. I probably will leave that questions in terms of portfolio allocation to Ella Cara, because she's a portfolio manager. But generally, if you talk about, since I'm more on the business development side, so because of regulations, you're going to see a push in terms of product classification, which means that we need to make sure our universe meets those requirements. And second, we have also seen that regulation across the world, especially in Asia as well and in ASEAN, and closer to home, like in Malaysia, Singapore, Thailand, there are already sustainable taxonomy that's come out for capital market and the financial institutions, which means today financial institutions need to look at to ensure they're able to map out the environmental risk, the climate risk related to the portfolios, and third, also to push towards getting the industry ready to meet those kind of requirements. And third, you also see, because of all this evolution that has happened, you also see a lot of commitment from institutional investors in terms of their pledge towards net zero, or their pledge towards ensuring ESG is now part of the process of their investment philosophy. So you see a lot of that push means that today portfolios will need to be aligned to integrating ESG into their investments. And of course, third, you need to understand, not just from the financial institutions on our commitment to net zero, we are engaging with our clients in terms of making sure they already have climate plans or climate transition plan within their businesses. And I think the light of HSBC, they are also engaging with their clients in terms of making sure that they can continue to bank or we can continue to invest in companies. Those kind of developments are already happening, and there are a lot of engagement that's already happening with the corporates in terms of making sure they are moving towards those direction in terms of the commitment to net zero. I'll pause here. Yeah, sorry, maybe to that Ella.
Yeah,
Ella,
thank you so much. Perhaps Alakara, I think that's your opening, your thoughts and views on this from what you're seeing at your side.
Yeah, certainly there's certainly a lot more demand and interest that we're seeing from our clients, and obviously as we're getting closer to greater metrics and obviously that framework from a regulatory point of view for ESG and sustainability, that's then drawn a lot more attention and questions from clients. Certainly we've been able to, we have key institutional clients where we're building a lot more bespoke portfolios which have that combination of the Islamic finance traditional exclusionary areas, but also focusing on sustainable leading companies, as there obviously there's that increased focus, and that can be used as constituents of, for example, MSCI ESG leaders indexes as well. So again, we're seeing that certainly that demand for products there. We're also seeing increasing requirements to report obviously on our ESG credentials within the funds, and for example our flagship Islamic World Equity Fund, which has a AAA ESG rating by MSCI, they are the type of quality factors which are being looked at and engaged on with our clients as well.
Great, thank you very much. So I'm hearing increased scrutiny or increased demand in disclosure and regulation across the board. And also it's really about partnering with clients. I think it's the same thing, Rajami. On your side, you're providing products that would meet the client's needs and understanding what it would be to serve them in transitioning. And Angelia, on your side, I think it's more of a discussion approach with your clients and understanding their needs as well. If we can move on to the next question, perhaps I'd go back to Rajami and get you to describe in terms of investor appetite. You mentioned about ESG support. Really, what type of investors are driving this demand?
Okay, so maybe I can just comment from a regional as well as a domestic perspective. So as we all are aware, and as Angelia as well as Kara mentioned, so an increasing number of investors have made their respective declarations regarding being signatories to the likes of the United Nations Principle of Responsible Investment and also net zero within their respective portfolios as well. So the kind of investors who, I mean, at least in terms of what I've seen in the order books of some of these transactions, you would see it would depend really on where the jurisdiction of the issuer is. So if it's a global sukuk transaction, if it's happening out of Asia, for example, you would see predominantly demand coming from the likes of Singapore, Hong Kong, as well as London. If it's a Reg S transaction, if it's a 144A, which is made available to onshore US investors, then you would see a sizable demand from onshore US investors. So I think what the point is that typically you would see, number one, sukuk as an instrument has been increasingly plain vanilla now to a lot of investors since the first sovereign issuance happened in 2002. A lot more, it qualifies for a number of indices, such as the JP Morgan Index, for example. And if you add that other layer of ESG on it, yes, you will see new investors, but predominantly the investors are, your normal funds. So when I say the new investors, and when we did the Government of Malaysia's 2021 USD Sustainable Sukuk, we did see investors that we had not seen before come into the transaction, and that was predominantly continental European investors who, number one, did not typically look at Sukuk, nor Asian issuers per se, but they came into the transaction. Some did not come in, but some asked a lot of questions during the book building process, which we duly responded to. And if we go back to Malaysia, so we know the likes of EPF, we know the likes of PUAP, for example, the respective insurance and provident funds, and Khazanah, these are local signatories to the UNPRI. So increasingly, they will need to put funds to work within some of these instruments. But if I can just end off with a very quick example of a transaction that we did just last week in the ringgit space for KPJ via an issuer called Point Zone. It was a 555 million ringgit transaction, which is about $123 million. It was 9 times oversubscribed. It was the issuer's debut sustainability sukuk. And if I look at the constituents of the order book, none of them, I mean, not to say none of, but not many of them had a specific ESG portfolio, but they bought the instrument because, I mean, increasingly, obviously, because it's a healthcare issuer, it's a good credit, but because the instrument was overlaid with a sustainability element, it did really help with that particular distribution. And I saw the same when HSBC Amanah ourselves issued our own SDG Sukuk in 2018. Most of the investors were not buying it because of that fact, but definitely it helps because then they can, I mean, as these investors move forward, they would need to have a larger portion of their funds deployed towards this.
I think that's great, because touching on your point about the characteristics, it seems that there is a lot of demand, but maybe going to Alakara, if we look to zone in on what would make a Sharia compliant characteristic of the product or Sharia compliance within the offerings, what would that feature have to offer for investors?
Yeah, in terms of the benefits, well, Sharia compliant firms have many attractive qualities, such as stability and sustainability, and that's where the underlying the underlying fundamentals of the business very much focuses on the efficiency and the operational effectiveness within the business. So that can be low levels of cash balances, low levels of debt on the balance sheet. But importantly, these characteristics provide greater robustness and defensive performances. And we've seen that through business cycles such as the global financial crisis. Interestingly, more recently in the down markets of 2022, where we saw the MSCI All Countries Islamic Index outperform the MSCI All Countries World Index by around about 500 basis points. So that's quite a difference in terms of where you're seeing traditional Islamic company or Sharia compliant companies outperform wider indexes. And research is shown that Sharia compliant firms have on average much higher ESG scores than non-compliant ones. So there's plenty of benefits for Islamic investors, and obviously incorporating greater ESG sustainable factors will also have those longer term benefits.
I see. And maybe, Angelia, I'll get you to weigh in on perhaps some challenges in structuring Sharia compliant product. We've talked about its potential, and we've talked about the take up in demand. And I think some of the features Alakara has walked us through that. Maybe from your side, would there be challenges in structuring products in the space?
I don't think there's a real challenge to structure a Sharia compliant product. I think for the equity space, this is really not a problem, because the universe for the equity universe is much wider, and whether we integrate how we integrate ESG into our process in constructing a equity product, whether it be Sharia compliant or conventional, it's the same in terms of the ESG process. But the challenge I see is more on the Sukuk space. Because if you look in terms of the Sukuk universe, I think the Sukuk universe is about 882 billion. And out of this 882 billion Sukuk, you see about 2 to 3% of the Sukuk are basically either green or ESG or sustainable Sukuk. So you can see the Sukuk is really much smaller. Even just manage a Sukuk mandate itself. Currently, I think for portfolio managers, our biggest challenge is the diversity of the Sukuk universe, the liquidity of the Sukuk universe, and about those Sukuks that's in the market, most of them are actually local currencies or domestic. So if I'm a global manager managing a global Sukuk, I really want to see more dollar. And you see, if we talk about a local currency, and Raja Amir has shared, though 500 over million sounds really big in ringgit, but for a global manager, that's a really small issuance. And so for me, for Sukuk, we really need to see more depth. I think we have discussed a lot in terms of the Sukuk space, that we need to see more depth and think a healthier pipeline. I think now a lot, even from the Middle East, they are all tapping on more conventional rather than Sukuk. So I think we want to see more of that, even whether is it ESG or not. Having said, if we talk in the Middle East, where we talk about regulation, especially like in the UAE, Standard 59 talks about asset tangibility in the Sukuk structure. So when you look at that, sometimes those are challenges when you want to create a ESG type Sukuk, because most of them are more asset-like in terms of, so it's more difficult to create that, in my opinion. So for the Sukuk space, I think it's still a lot more to be done in terms of creating a wide or a deep enough universe for us to kind of say we can do an ESG Sukuk mandate. But I think on the equity space is really not a problem, because even though we manage Sharia compliant equity as a manager where, across all asset class, we have integrated ESG. So today, if you pick a product from BNP Paribas Asset Management, any equity product, we have already integrated ESG. So to us, those products are already ESG compliant. It's just the Sukuk universe. We probably need to see more depth if we want to say, like, we have a global green bond, but it's probably now more difficult to say we want to create a global green Sukuk fund. I think more needs to be seen in terms of the pipeline for the Sukuk space.
Okay, so basically, just to summarize, you're not seeing Sharia compliance as a reason why green Islamic finance products cannot take off and actually accelerate in its growth. Based on that, I suppose, what type of outlook are you seeing in the next few years when it comes to this market, Islamic finance, green products?
Well, like I say, I think first regulations is pushing towards making sure there's ESG integrated into our investments. So I think if we talk about generally what are the opportunities in terms of business development for Islamic, I think there is still a lot of demand. There's a huge capital in the Islamic space to be deployed into more investment products. I think if you talk about Sharia compliant products today, a lot of that is coming from the Middle East, Malaysia, Indonesia. But I think beyond that, it's still rather niche in terms of seeing the growth. Hopefully, we want to see more growth in that. So I don't see really a challenge, but it's more about making sure there's more products, more investors choosing Sharia compliant products. Today, I think Malaysia is still the biggest market. Indonesia is still the biggest market. Middle East is growing, but I mean, for our business, we still see it coming from Indonesia and Malaysia.
And Alakara, what type of outlook are you seeing as well from your part of the world? Are you seeing a pickup in in demand? And what kind of do you see?
Yeah, there's definitely clear opportunity and potential for greater fusion of both approaches, and I suppose it's getting that connection in terms of the religious viewpoint and the ethics viewpoint, and getting those mindsets to align. Islamic finance coming from traditionally more of an exclusionary approach with financial restrictions versus ESG, which is target goal-based, overlap with some exclusions, but not all in the traditional areas recognized in Islamic finance, but also encompassing that ongoing engagement. And as previously mentioned, with everyone's responsibilities in terms of ESG is very much embedded within investment processes now. So actually, most investment houses, investment processes lend themselves easily to being able to embed sustainability to within its financial products. But I suppose it's just increasing that awareness and having those discussions with clients and making it a bigger focal point, and really highlighting the engagement, certainly on ESG and sustainable practices from the companies that they're invested in. So I think greater awareness will also help things going forward, and that will help gain greater traction and growth and demand for these products going forward.
If I can just maybe expand a little bit, get you to expand a little bit on the awareness, the type of awareness that you're thinking. Is it the awareness on that Islamic finance does have a potential within the ESG space as well? Or awareness on ESG is already something that's already quite understood, and it's just where Islamic finance sit is something that you were hoping investors would have more awareness?
It's bridging that gap really, and having the discussions with the clients and saying that actually you already have great credentials as a standalone Islamic equity product in itself, and then saying you can take that step forward and actually officially giving it a title in terms of saying it is actually an ESG a mandate, and saying that there are lots of opportunities, and obviously now the processes and the framework behind that. So again, whilst I said that we've had interest in and we've built specific products for segregated mandates, I think the scope going forward to have, for example, an open-ended type fund available for that is both ESG and Islamic in terms of their nature.
That's great. Thank you so much for that. Raja, Amir, maybe some final thoughts on the outlook and what you hope to see this year and next year.
Okay, outlook-wise, pretty bullish in terms of what what we expect to see. So I mean, in capital markets side, so capital markets, clearly Malaysia is, as Fitch reported, about 91% as of last year. The number of ESG sukuk issuances came out from Malaysia, so there's a lot of prospects within that area, because as a country, there's a lot of incentives which the government is providing in terms of raising a green sukuk. So if in Malaysia, for example, if you raise a green sukuk, you can draw upon some of the tax grants which are provided by the Securities Commission. You're able to claim up to 90% of the second party opinion provider's cost. You're able to claim on top of that. And also, I mean, this is not just Malaysia alone. If we look at globally, Singapore has a similar grant scheme as well. Hong Kong, HKMA has a similar grant scheme as well. And recently, in the latest announced budget, the green tax allowance, as well as the green income tax exemption under the budget 2023 as well, has continued to provide certain incentives to the industry to look towards this. And this is also coupled with the fact that, the National Stock Exchange, FTSE Russell, Bursa Malaysia FTSE Russell, has a FTSE for Good index, which a lot of clients want to be on. So with the incentives being provided, with the country's own ambitions to be net zero by 2030, within the raft of a regulatory requirements which are coming to play, such as the climate-based taxonomy, the TCFD mandatory requirement for financial institutions to report by 2024, value-based intermediation, being pushed by Bank Negara, as well as specifically what was highlighted in the financial sector master plan by Bank Negara 22 to 26. I think there's a lot of, catalyst, a lot of spur for the industry to proliferate and for products to grow, and for issuers, clients, and so on to take up these kind of financing. But we of course need to be cautious, because greenwashing is something which is, because of the lack of standardization, because clients themselves, they need to, before you issue such a product or use such a product, you need to have your transition plan in place. And for some of these companies, that transition plan could, largely to a certain degree, impact their business profiles, because they're going from a company, doing a certain business. Now you're transitioning into, less carbon intensity, for example, and that could impact your own business trajectory. And then, of course, the SMEs, which are the backbone of many, many countries, especially here in Malaysia, they can't be left behind. A lot of them are struggling as we come out of COVID to even remain, going concerns. This is not really top of mind for them, but because of the regulatory stakeholder and even, the supply chain pressures which they would be facing, it's not really a choice. It's not a nice to have anymore. It's really an imperative. So therefore, I think it's a whole of nation approach. It's a just transition. We keep on saying these things, but we need to, hand in hand walk with our clients where we are able to, and hopefully there will be a more just transition as we move forward.
Thank you for that, Raja Amir. I believe that's all the time we have. Raja Amir, Angelia, and Alakara, it's been a pleasure. Thank you so much for your insights. Handing the floor back to you.